Hello, I'm Jorge Herreria. Today is January 30th, at the end of the month, and I want to give you a different angle, so to speak, on the current market. I already called it the follow-through day, and they are acknowledging, it doesn't look to be strong. So here's another way to kind of confirm, or the way that I see the market. So many indicators. Okay, before jumping in that, I'm going to I want to show the the spider, the S&P 500 ETF, and this is on the year 2008. So here is May. What date is this one? It should be, yeah, June of 2008. So the current market is behaving kind of similar to what happened on 2008. So here in January, we have the pullback, and now towards the end of the month, we have a little rally. And then in February is chopping back and forth. In April, it gets worse. And then around the week of wherever March 10 happens, seems to be the bottom. So in this year, it was, okay, March 17, and from here we have a rally, March all the way to May. Okay. So it's something to keep in mind. Will the market repeat as it did in 2008? No, but well, sometimes the same sort of behavior happens. And another observation that I noticed is on February, there's gaps. Here's one gap, and gaps on the way up and then on the way down. And actually, with the gaps on the way down for the month of February, they are violent. They are like this one, and then you can see gaps left and right. So something to keep in mind that with this type of markets, when there's a slow growth from one day to the next, if let's say you open a position over here and then it gaps down, there's not even a chance to get get out for a small loss. It's like it's taking you out. Okay, so just that was the message on that one. So gaps might start happening, especially because this is earnings season, and we currently are on earnings season. Okay, so using a stock chart over here, I'm comparing the Russell 2000 small caps versus the Russell 1000, which is growth on a weekly basis. The Russell is not leading. We can see it over here, and here's a snapshot. The big drop down. So that's kind of okay. Investors are not willing to risk it with the small caps. I like this chart. What it's telling me. This one is the Russell 1000 growth versus Russell 1000 value. So the overall trend is going up. However, this week, actually, no, it's not this. It is daily. So from the 26 to the 29, look how it dives down. So what it's telling me right here is the growth is not leading. What is leading is the value, the stocks. Okay, so that's what that chart is telling me. Here's another one, which is the Russell 2000, the small caps versus the Nasdaq, and that's positive. This is the weekly. On the week, the Russell beat the Nasdaq. So probably has to do a lot with Apple being involved. Not sure. Okay, here's the Nasdaq versus the S&P 500 on the weekly. And again, yeah, the Nasdaq is not leading, and usually the growth stocks, when the Nasdaq lead, it means the growth stocks are leading. So here's another angle that is saying, well, no, it's not leading. The S&P 500 is behaving better. So now here's the small caps versus S&P 500 on the weekly view, and same behavior. The S&P 500 is winning, not the small caps. So it has to do a lot with oil. Here's the at stock charts, the market breadth indicators. And okay, we have the NYSE advanced decline. I'm kind of seeing, okay, I'm liking this. That is now turning up, the advanced decline. The up and down volume as well is going up. And the lows, new highs, new lows, is flat. So it looks like the going down has a stop, the amount of stocks going down. Similar now for the Nasdaq. This is the one that is turning slower compared. This one is skyrocketing, and this one is kind of doing a U shape over here. So the Nasdaq is slightly behind. Same on the up and down volume, is going up, and on the new lows, oh boy, well, okay, hopefully it stays low. I don't know. Amazon might have to do with this, something like that. And similar on the Amex. The Amex is actually doing more better over here. So that kind of guides me where the money is moving. Definitely not in the Nasdaq. Well, not in the Nasdaq, but Nasdaq is out of the three is the worst. Okay. Here's the sector breadth. So we have consumer staples. No, discretionary. This is discretionary, advanced decline as discretionary, up and down volume, and highs and lows. Okay, so similar as this is okay. It's trending, starting to trend up, which is nice, and this one as well. We have technology over here, is XLK, and this one, okay, definitely the bottom is being kind of set. We can see a bottom over here, and it starts moving up. It starts moving up as well. Industrials, same behavior, is kind of moving up and flat on the high lows, so the lows have stopped. Then we have building over here, which as well, kind of, can you see the U-turn over here and the U-turn here as well? So the advanced decline seems to be going up, and the up and down on volume is still going up. However, watch out with this one. The lows hasn't finished going down. The ones that is, look at this. This is energy. It's like boom, going fast. Boom, going fast. This is staples. Look how the charts are more aggressive on the defensive side. Well, yeah, energy. I don't know if it's a defensive or not, but it's the oil thing. This ETF, the XSE, the 50% of the ETF is oil or oil related. So they have had a good 2 weeks or so. Yeah, 2 weeks. So same for staples. So look at the chart of the staples and you compare it with the others, and this week. And now take a look on this week. Consumer staples. Where am I? I'm sorry. XLP. Yeah, this is a staples reacting better. Healthcare. Nope. Healthcare is dead. It's not working at all. And then down here we have utilities, and utilities has been skyrocketing and continues to go higher. So it seems to be that the utilities is the one that is pushing the S&P 500 along with the energy stocks. I dare to say. And finally, financials. Financials, okay, well, the same as the other stocks, as the other sectors, I dare to say. Okay, here in the technology stocks, the SLK, something that got my attention is, okay, what dominates the ETF, and is Apple, Microsoft, Facebook, AT&T, and Google, Verizon, and so forth. So these are stocks that I'm watching closely. Apple is not intended to be bought, but yeah, I have a position on Microsoft and trying to get some on Facebook and AT&T. AT&T for the dividend. Alphabet is Google is reporting on Monday, so something to keep an eye on. What is the next one? Okay, here is the industry performance year to date, and the only three that are in green. It is telecommunications. Let me hover over here. Telecommunications with 1.1% year to date, seems to be. No, 5%. Utilities 4.9%. Consumer staples 0.45%. And from that point forward, all of them are in negative. So again, the year to date, what is working is defensive sectors. Okay, so hopefully it helps you this on assessing your trading strategy. Talk to you soon.